Hi, I'm Dr. Doug Lindberg. I work for the Christian Medical and Dental Associations as the director for the Center for Advancing Healthcare Missions. My wife and I served as healthcare missionaries in Nepal for 4 years with team, and now I'm excited to continue to be involved in healthcare missions through this role with CMDA. And we're excited to partner with GMHC to bring you this webinar this evening. So our topic for tonight is an important one. And it's financial planning for healthcare missionaries. I think the conversation will be useful for any sort of missionary, be it domestic or overseas, be it healthcare or any other missionaries. Again, some of the topics may gear a little towards those who are in healthcare, but there is plenty of overlap. So I think any of you will benefit from this. We are pre-recording this, so any questions you populate in the chat area are most welcome and encouraged, but we won't respond to them verbally live as we go here. But I'm hoping that one or two of our guests will be able to join us in the chat room and be able to respond to you. And we'll also make resources available that they refer to on the back end, either in the chat or in some notes that we make available to you. So by way of introduction, we have two guests joining us for this webinar. And Charles Collins is a chartered financial consultant. He and his wife, Kathy, live in Chattanooga. He's actually coming to us from Budapest, Hungary during this call. So thank you, Charles, for making the time and facing the time zone challenges to be a part of this. So Charles and I initially met at a CME conference for missionaries in this past spring. And the conversation we had there in the lobby was kind of a God moment and really sparked the idea for this webinar and really the need for a little more robust discussion about some of the complexities and nuances of financial planning for healthcare missionaries. And so I really appreciate Charles's passion and interest in helping missionaries engage in this topic and really helping you guys to strategically position yourself to not have finances be something that limits you, particularly later in your career, but even as you move forward through the early years. So he is passionate about equipping professionals, again, to position themselves and their family in a way that allows them to spend their time pursuing their calling and passions, doing what God designed them to do, and helping them execute on those plans. So, Charles, thank you for being here. And our other guest is Lauren Gill. And Lauren has been recognized for over a decade as an expert in overseas and missionary taxes. He's the son of missionaries and grew up overseas. Later, he served himself as a missionary in Bolivia, South America for 6 years. And during that time, he really came to appreciate and see for himself the complexities that missionaries face when they're filing their taxes. So after serving in Bolivia, he trained in tax preparation and worked for 5 years with Ethnos 360, which was formerly known as New Tribes Mission, filing taxes for thousands of field workers that were employed by Ethnos 360. And during that time, he really came to appreciate that the needs were not limited to Ethnos. And so, prodded by the many calls from missionaries from other orgs, he established a website and an organization, missionarytax.com, which is how he and I initially got connected. And he's been advising and serving missionaries in that capacity on their taxes ever since. So, Lauren, welcome to you as well. And I'm excited to start this conversation and looking forward to learning from the two of you. So let me just open in a word of prayer and then we'll get started. Heavenly Father, thank you for this time. Thank you for these two men, the years of expertise and service that they bring to the table. Now, I pray for each person that's tuning in, that you would bless all of us and help us to learn from this time together and help us to apply the knowledge to our own individual situations and help that to be something that allows resources and time and expertise to be unleashed for your kingdom, and help us not to have to worry about some resource issues that through good planning and good advice we can avoid. So Thank you for this time. In Jesus' name, amen. So why don't we start off by talking about retirement? And this is a concept that sometimes can seem just so far out in the future that people don't think about it a whole lot. We kind of know what's out there, but particularly for missionaries who are, dealing in the here and now and having to raise support and, not necessarily thinking about what life's going to look like when they're, 60 or 70, but, wherever they are in their career, it is important to be thinking about that. So, I have some specific questions here for you to kind of spark the conversation, but please feel free to take it in whatever direction you think would be useful. So the first question I have for you is, could you talk to us about the value of a Roth account in a missionary's retirement plan, be it a 403B or 401k or whatever their employer/mission agency has to offer?
One of the biggest values for that, Doug, is that when a missionary does reach retirement, many missionaries have what's called foreign earned income. So they're paying very little, if any, tax at the U.S. level, and they're not making as much. Obviously, they could make a lot more in their professions back home. So they've given up quite a bit. So their tax level, though, is low now. And saving money pre-tax makes little sense. And it even makes less sense when you consider the fact that when you retire and start taking Social Security, up to half of that or 85% of that will be taxed if you make almost anything at all in taxable income. So if they would save their money in a Roth account, then they could have a significant amount of retirement. I just spoke with a young couple that is heading for the mission field. They're in Budapest right now, and they'll stay here for a year, and then they're going to Indonesia. And they've saved about $16,000 in Roth IRAs. Well, and they're putting in a small amount, but as we projected things out, 30, 40 years from now, they will easily have well over $1 million. If they retired and they had $50,000 in Social Security income, that if that was in a pre-tax account and they're getting $30,000 or $40,000 of required minimum distributions, that would cause them to be paying tax on 85% of their Social Security. If that comes out in a Roth distribution, no tax would be charged on that, and they would also avoid all the tax on their Social Security.
Yeah.
So they could probably have a zero tax bill for their entire retirement if they planned that well. Unfortunately, this is the type of decision that you have to make 30 to 40 years ahead of time.
Early.
And it's hard to think like that, but that's one thing that's really valuable. I've even found some mission boards that have a retirement plan for missionaries, but they don't have a Roth component to it.
Yeah.
So I've worked for years to try to get them to change, and then it takes a lot of years to move the money they've put in a pre-tax position over to a Roth side.
Yeah.
But we can do that because you have a couple would have a $25,000 standard deduction and then personal deductions. So they could probably move $25,000 to $30,000 a year over from a pre-tax to a Roth, and which I did with a missionary couple over in Africa. It took us about 12 years to move all their pre-tax money to the Roth side. But now they have a significant retirement value, and they won't be taxed at all on their Social Security. So we'll be saving them $8,000 or $9,000 a year.
Excellent. Is it accurate to say that, best case scenario, people are doing it from the get-go? But if we have someone on the line here who's tuning in, who's been overseas for 20 years, and they say, what's going on there? I didn't know about that, or I have some money in a in a Roth and some in a traditional IRA. So you're telling us that all is not lost if they're in that situation. There is the opportunity for conversion. Is that correct?
Yes, just that example of that couple that is serving in Africa that I worked with, they had a significant amount of money saved in a pre-tax account at their mission organization. And once we got the Roth component put in that retirement plan, we were able to start transferring the money they had in the pre-tax side over to the Roth side. And, with a couple having a standard deduction of $25,000 plus personal deductions, you can move as much as $25,000 to $30,000 a year doing that. So that will take a while, of course, if someone is in their 60s. I have one couple right now I'm working with that they only have about 5 more years, but they would have time to do that.
Excellent.
May I add to that, Doug?
Absolutely, please.
Charles, I appreciate that you don't just have everyone move it all over to Roth immediately on the first get-go, because that hits people on taxes a lot of time. And so, it's obviously that you're aware of that. And we run to other people that just switch everything over to Roth right away. But there are also options for people if they are using stuff like the foreign earned income exclusion, or if they are a pastor, they might have a housing allowance that can even up the amount that's not taxable, so they can do even higher than those other deductions in specific cases like that. So it's always good to consult, and with the advisors, because you can maybe move that even over faster in certain cases.
Yeah, having some help from someone like Lauren, an advisor who understands these things, is really helpful, and they can help you manage it. Talk with your CPA, get your financial advisor, work that out, and that way you can make the best path fast as possible.
Absolutely.
So I think early on in this discussion, we can take it in that direction quickly. How, if the complexity is outpacing people's ability to handle their own situations, how would you guys recommend finding an expert, a tax consultant, a financial planner who has the sort of street cred or experience to be able to handle the complexities of a missionary situation? How do people go about doing that and not winding up with just some random person from Fidelity who doesn't get the ins and outs of their specific situation?
Well, when I was at CMDA with you last April, I ran across quite a few missionaries who needed some advisors to help them, and they lived in Kentucky and Ohio and California. So I went through my contact list and checked with people I knew to find some experienced people who would give them good biblical advice all around the country. And so I've been able to refer to 5 different people so far. If you don't know someone like Lauren or me, then could go to kingdomadvisors.org and search out someone who's a certified Kingdom advisor. That's just someone who has the credentials to advise properly, but has been vetted by the organization as being someone who you could trust to give biblical advice. Lauren, you got any thoughts on that?
Yeah, as far as like the tax side of things, a lot of things that a normal advisor would advise is almost exactly opposite of what you want if you're overseas. And I find that a lot of people are not quick to say that they don't have experience in the area. Rather, they'll quickly look up some things and read a few things real quickly and say, oh yeah, I can do this. So it is a little bit difficult to do that. And I would say if you're looking online or anything like that, that you are then going to start asking the questions: how many of these kinds of returns have you done? How much experience do you have? Because you can't you can't just go to the normal person down the street, because they're not going to understand how it all ties back together and what it does. So, you're going to have to do, if you're doing your own research, you need to vet the people and just see if they actually have dealt with that. And then look, there are, if you're going to search for, missionary advisement or missionary taxes or anything like that online, there's not a whole lot of people that actually do that. So you'll probably narrow it down pretty quickly to find some that do have that knowledge. But going down to your local branch office, or somebody, even somebody within the church who says, I do taxes, and they want to help you, they're really probably not going to understand, and they're going to probably give you bad advice, thinking that they're doing the very best for you.
Thank you.
I do have one referral to a gentleman that I can give you that website later, Doug, who is a retired master's level financial advisor. He's got a master's of financial science, and but he has devoted his life retirement to advising missionaries specifically, and just much as Lauren has. I'm sure that there's very few people like Lauren out there.
Yeah, and we can have some of those resources in the show notes here. We'll have some sort of a resource available for folks on the back end with some contact information if they want to get plugged in to more specific advice that pertains to their situation. Because again, this is kind of an appetite whetter. So Lauren, basically what you're telling us here is that being a missionary and working overseas and, foregoing some of your income that you might make in the US doesn't give you a get out of jail free card from taxes. You still have to file your returns.
You still have to file a tax return. Absolutely. And that's a myth that a lot of people hear when they go overseas is, hey, you don't owe taxes, you don't have to file a tax return. And the IRS has been cracking down a little bit even more on that, because people will go overseas. They may even receive a 1099 from a church or something, and it gets sent to some old address that they haven't seen for a long time. They don't even know that they've received this and been receiving it for 4 or 5 years. And they heard somebody say, hey, you don't have to pay taxes, and it can come back to them. And when they return back to the US, the IRS has now instructed that Homeland Security and all is actually confiscating passports, and that can be a shocker when you're owing more than $10,000 and didn't even realize that you did. So yeah, the U.S. is one of the few countries in the world that actually taxes worldwide income. And so even if you think you don't have enough to do it, most missionaries are considered self-employed, and if they made more than $400 in a year, they still have to file a tax return. And there are ways of making that so that it's possibly not taxed at all. However, you still must file the tax return. So,
building on that, could you tell us about the foreign earned income tax or foreign earned income exclusion? Can you fill us in on that and how that can be an advantage?
Yeah, so the foreign earned income exclusion actually lets you subtract the taxability for the federal taxes of over 100,000 now. And every year it keeps adjusting a little bit for inflation and all, but it basically makes it so that's not taxable to the federal government. That does not exclude your self-employment taxes, but it does take that away. So for a lot of people, that can be a great thing. Now, what it also does is it takes away some of your additional child tax credits or child tax credits, earned income credits. So it's not always the best move to do, especially that some of the lower income that go back and forth, and they'll spend, maybe they're gone 2 years and spend 6 months in the US. Sometimes it's the long run a lot better for them not to do that. And once you've started doing that, you are required to continue taking that foreign earned income exclusion. And if you then do what's called revoking it, you can't take it again for 5 years. So you want to do a little bit of planning with it and make sure that it's the best bet. One strategy also that people can use that a lot of them don't think about is having spouses have a portion of the missionary income And so that both spouses have it, and then filing as married, filing separately, where one gets the credits and the other one can take the foreign earned income exclusion and kind of get best of both worlds there. So a lot of times when people look it up, the first thing they go, oh, you live overseas, just use the foreign earned income exclusion. You don't always want to do that, even though it can be a very great benefit in certain cases.
Wow. So these are discussions really people need to be thinking of. You know, it's not just tax time. It's
Oh no,
it's well before that to try and determine how your pay is broken up and
exactly.
all that. That's very interesting. Okay.
You want to forecast, and like I said, with that 5-year exclusion, sometimes you want to forecast 5 years ahead what you think is going to happen, because some of those decisions will be based on that.
Interesting. All right. So Charles, similarly to the, again, no get out of jail free card for taxes, okay, I'm a missionary. I'm giving of myself for these years or this part of my life. Surely others will take care of me as I get older if I haven't planned. We all know that's probably a myth. And sitting on a church mission board as I am on kind of the church side of things, we certainly encourage our missionaries to be planning ahead and not assuming that the church mission budget's going to sustain them when they're in their 70s and 80s. That's not what we're looking for. So how do people, you mentioned the Roth account, but how do you recommend that missionaries approach kind of retirement planning even early on in their careers?
The good thing about it is if you follow the basic principles that God calls us to follow, then all this becomes a lot easier. Having expertise like Lauren gives is just vital. But for it, just on the basic side, if you're living, they're already living on less, because they're on the mission field. They've already given of their time. They're probably being generous with their money. They're saving some, and they may be thinking, well, I'll just keep on working as long as I can. Well, sure, but at the same time, still save. But if you start early and you do that for a long time, like this young couple I was telling you about that's only in their mid-30s, well, they've already saved. It's only about $15,000, but they're adding to that continually, and over a long period of time with reasonable investments, they should have significant amount of money to be able to have choices. And if they want to keep working into their 80s, that's fine. But what if their health changes? What if their situation where they have to come back? One of them gets sick, as one of my clients who went on the mission field, and then they had to come back to have an operation, and they were going to go back, but then the other one ends up with stage 4 cancer and passes away. Well, they had the money to make decisions. They were flexible. Got working with a missionary out here that's been in Europe for almost 35 years. And she's sitting there going, I'm more this culture than I am American. But she's got the money to retire. If she chooses to retire, she can retire. If she doesn't and she wants to keep working until she's 90, she can. But at least she has choices. And so I would highly recommend that they just be wise and put some aside for time in which they may find that health or family or other reasons might change their direction. And then they would have the financial opportunity to make a choice.
It's very wise.
So this is not an absence of faith.
No, no more. I mean, I tell missionaries, I say, we don't have herds of camels and sheep and older son with the understanding that he's going to take care of the farm and take care of mom and the kids. We don't have that anymore. So that's why we buy life insurance. That's why we save money. You sit there and go, okay, that's the replacement for the herds of camel and sheep. It's just making good long-term decisions and being wise. And if you do that as a lifetime practice, then you don't have to sell the farm to make those critical decisions.
Yeah.
20 years from now, 30 years from now.
You mentioned life insurance, and we're not looking to go here necessarily deeply into numbers of what you need and how long your term should be and things like that. But with broad strokes, do you have any kind of general advice for people who are considering going to the mission field, or those who are already on the mission field about life insurance?
Lauren, you want to start on that one?
Well, that's not an area that I deal with very much, but it can be an alternative sometimes for people. I mean, they need life insurance, and it has been my experience that it can be difficult if you are planning on leaving, and you mentioned that in your life insurance policy application that you're going to be going overseas. There are some places that will do that for different locations, but a lot of them won't even issue you a life insurance policy if you're going overseas within 2 years. And some of them will be country specific if they will allow it or not. But that's not an area that I personally deal with directly very much. So Charles, I'd have to turn that back to you, because I think that's probably more in your wheelhouse.
I have dealt a lot more with that, and I agree. Your advice is exactly right. If you're thinking of that, and a lot of my clients have worked for 25, 30 years and then taken steps to go to the mission field. And what I've talked to them in the past is make those decisions early before you have to ask the question, are you going to be traveling overseas? Because there's a bunch of countries that are on no-fly list for insurance companies. So if you haven't made that decision and you are on the mission field and you realize, yes, I would like to get some life insurance, there are companies out there, and you just need to find a good advisor who can deal with insurance companies, and he can do a survey and find the companies that will write for you. But if you had any advance warning, that's definitely a thing to do ahead of time. And it's cool. Cheap. If you're young and you're thinking about going to the mission field later on, term insurance for 20 years or 30 years is, if you're healthy, is really very cheap. I finally convinced my son to get some when he had kids, and for $1 million and $500,000 on her, it was only $80 a month for 20-year level term. So it's not very expensive. I told him, look, either get it or I'll pay for it. Just go get the exam.
Yeah.
But if something happens and the Lord takes you home early and you got kids, there's a problem. It'd be good if you have some insurance.
Mm-hmm. And don't smoke, right?
Yeah, that. Like I said, healthy non-smoker is really helpful.
Yeah, and I think my wife and I had that experience too, not smoking, but we were advised to get our life insurance in order prior to leaving for the field, and that was excellent advice. So for those of you who are in training, or if you're students with kids, or think that sometime in the next few years you may be going, it's an excellent time, both because particularly if you're healthy now, you don't know what's going to happen in the next few years. That could jack up your rates. Certainly if you're planning on going overseas, that could jack up your rates, and you're not going to regret having it, and you certainly could regret not having it. And also, it's important to say, my understanding, correct me if I'm wrong, is that once you're locked into a rate, even if you move to the Middle East, that's not, if it's something that was after they initially wrote your policy, it's not like they're going to raise your rate because you've made that move, correct? That rate is locked in?
Absolutely. Yeah, that's locked in.
So that's a really important thing to be thinking about that early. And it's, most employers or agencies will give you some life insurance, but if you have kids or a spouse to support that, you're probably going to want more than what you have just through your employer. So you can get it for a reasonable amount. Good. So speaking of kids, what about kids' education? How should we be planning for that? as missionaries? What sort of tax advantages might there be available in that area? Can you guys speak to planning for educational expenses?
Educational expenses are an area that, a lot of people are really thinking that they're going to get a big benefit off on taxes. But the reality is the IRS basically considers that a personal expense. And so whether you are sending children away to a boarding school or something like that, or homeschooling them, most of those expenses you don't get a tax deduction on. It's possible if you were to go with an organization that requires that the families send their children to a specific location, that could be written off as a ministry expense, but that would be a very unusual situation that would actually apply to that. So education expenses for young children aren't really a benefit. Now, if it's education like you're learning a new language for yourself as a missionary, you're advancing more biblical studies, you're doing any of those things, yes, we can definitely use those as expenses and reduce taxes. But children's education is not really going to help most people out.
And on a, you can use a 529 that will avoid federal tax in some cases, and that can be of some benefit. In other words, the capital gains won't be taxed if they're used for secondary education. So that's one possibility. But saving for a long period of time really is wise, just like anything else for that. Also, it's colleges will tell you that it's just a natural thing to have to graduate with a debt, which it doesn't have to happen that way. I've worked with missionary couples for years, and they save money and they had money for college. And between work study, between scholarships, and the kids, being creative, going and asking some of the parents, supporters, if they would share a bit in some of the education differences, then you can still graduate from college without a debt. And a lot of these kids are going to be going back to the mission field. They're not going to have stellar salaries. So, if you want to graduate and be a doctor and hopefully have a salary of $200,000 to $500,000, fine, you can pay off a debt. But if you're going into a normal situation where with average income or going to mission field, then it would be better to do whatever it takes, stretch out education, go over a longer period of time, avoid graduating with a debt and having a minimal income to pay it off, because that puts you behind the 8 ball for decades.
Yeah, and I can speak a little bit to that from personal experience as well. My wife and I are both physicians, and we certainly had a sizable debt when we graduated from medical school back in 2003. And so the two things to be aware of for people considering healthcare missions, one is MedSend. And if you are not aware of that, you should be, look it up online. But MedSend is an organization that provides grants to people engaged in healthcare ministry as on a full-time basis, and they will pay your student loan, your monthly student loan payment, if you are selected as a grant recipient for the time that you are on the missions field. So that is not to say that you should seek to amass as much debt as you can. It's still, that's God's money and money people are giving in order to support those who are doing that sort of ministry. But it is a means through which debt need not be what keeps you home and keeps you from doing ministry. And that can be for physicians, nurses, ultrasonographers, veterinarians have gotten these grants as well. So it's anyone doing healthcare ministry, and it's both domestic and abroad. So MedSend's a great resource. And then another excellent resource is what we kind of jokingly refer to as FedSend. And so this is the Public Student Loan Forgiveness Program. And I actually just last November had $70,000 of student debt wiped out through this. And this is a little more tenuous. I would not advise necessarily banking on this because it is subject to change. You know, you hear a lot of chatter about what's going to happen with student loan forgiveness and different programs in the media these days, because it is still a hotly debated topic and may evolve based on administration in Congress. But basically, broad strokes are, if you work for either a nonprofit or for the government for a period of 10 years and make 10 years worth of qualifying payments on your student loans and are enrolled in an appropriate repayment plan, which can be an income-based repayment plan. So for those who have a lower income, your monthly payment gets adjusted down from what it would be over a normal 10-year plan. So any outstanding balance on your loan after 10 years is forgiven. And so there are physicians out there. I'm part of a Facebook group on this topic, on the PSLF, or Public Student Loan Forgiveness group. There are physicians out there who have had $600,000 or more forgiven, and that is tax-free. That is not taxed. And so it's an incredible benefit. And so if you merge MedSend and FedSend, you have compelling reasons to not allow student debt to scare you away from serving on the mission field. In fact, it can even be an advantage. So,
Fantastic.
Yep. So that's, but again, I would fully endorse the concept of limiting debt, because again, we don't know how long PSLF is going to be out there, and MedSend is people's tithe money, and also MedSend does other work supporting national scholars around the world and advancing their education. So the more resources they can use for that, the better. But there are resources out there for people for your student loans. So don't let that scare you away.
And also, one thing in my area, Chattanooga, there are some charitable trusts, the McClellan Foundation, Generosity Trust, that actually have as part of their focus to support students who are going to get Christian education or are going to enter into Christian service. So you might look in whatever city you are, if there's a Christian charitable trust that has that focus. There might be scholarship money available.
Great. Yeah. So what about the situation where someone, okay, so healthcare missionaries, if we're speaking to that audience here specifically, can be in kind of a unique situation in terms of what they're earning from one year to the next, right? So in some situations, someone comes out of their training, be it from medical school, nursing, PA school, whatever, and they're earning a fair bit. And then they go into the mission field and it goes down. And then maybe they're 3 or 4 years on the mission field, a year back here in the States, and yo-yoing like that. Or they're here for a long time and then they go over. So and are working for a lower salary. So what sort of advice do you guys have for capitalizing on that from both and planning for that from both a retirement and tax planning standpoint, kind of that unique, strange kind of yo-yo that people can have in their income that can be a little bit unique to a healthcare missionary compared to, say, a pastor or an evangelist, and what their earnings might look like for furlough or home assignment versus their time on the field?
First thing they need to do is call Lauren and beg him to take them as a client. And or ask him if he's got someone they can offer on an overflow. I mean, that would be a tax and a planning challenge. That would be an opportunity to learn and grow. But that's manageable. But you need the expertise that Lauren has, as well as planning.
So, yeah, from a tax standpoint, you're right, Charles. It's that's one of those things is communicate ahead of time as to, hey, here's the expected changes, and the earlier in the year, the better. There are strategies that can be put into place for while you're in the U.S. and earning some, especially if you are a partner in a practice or something like that. There are a lot of strategies that you can do to reduce taxes or even get tax-free income within the US, just doing your business entities and all that are there. So the sooner that you set that up and get going, the better on those years. And then, you know, when you're overseas and suddenly you have this huge dip in income, that's when we want to start looking at the opportunities to maybe move some of your retirement savings into that Roth, like Charles was saying earlier. Because if that's when it goes way down, and we've got a whole bunch of income that we can make as tax-free, and then, you know, move some of that over. So it depends if you're on an IRA, like a traditional IRA, or if maybe you have a 403B or a 401k kind of retirement, as what can be done. But that's IRAs. One of the problems of doing the foreign earned income exclusion is that if you've excluded all your foreign earned income, you have no earned income, and IRAs require to have earned income as their minimums, and that's an area that people get themselves in trouble in. So, you know, those would be sometimes things that we want to take into account ahead of time. Is there going to be any U.S. earned income? Because then we can contribute to an IRA, or in those years you can still convert from a traditional to a Roth, and that's where looking ahead of time and knowing how much taxable income you're going to have is really important. And, you know, Charles was already alluding to that right away from the get-go as to needing to do that, you know, and not put yourself into getting all that IRA or retirement income taxable when it doesn't need to be. You can spread it out over different years.
Interesting. So complexity is is a very real.
Another thought.
Yeah. Yes, please, Charles.
Oh, I'm sorry. Another thought is a friend of mine his father had that passion to want to be on the mission field, but also work some. So he and his partners all covenanted to send one to the mission field for a year at a time, while the others made up his salary for his family. So basically, he would go and work for no salary, and his partners would pay his bills for that year and savings and everything else. And then he would come back and then be part of the support for the others. There were, I believe, 4 or 5 doctors, and they would do that. They did that over a period of about 20 years. So if you have that sort of passion to start early, there are others who have the same passion. Form a partnership. You can.
Absolutely.
I love that idea. I would love to see more of that taking root and people building those networks and bridges. That's a great idea. Another question I have, and this is I think one that's a common one. People coming out of training who own a home, or who have been working for a little bit and own a house, and they're kind of waffling, okay, do we want to rent this out and hang on to it, or unload it before we move overseas? And obviously there are a lot of mitigating circumstances that are not necessarily financial, but from just a planning, finance, tax standpoint, do you guys have any advice about whether or not to hang on to a house versus unload it prior to going overseas or changing location?
I give you 2 examples of some missionaries that I met at the CMDA. Two of them I met had kept their house when they went on the mission field. And they'd been on the mission field for some 30 or more years. And their house was relatively low priced, it was average price then, but 30 years later, it's worth a significant amount of money, and they're getting a significant amount of income on renting it. And now it's worth 5 times what they paid for it. But in both instances, another couple went with a mission organization that really does not provide any help in retirement. So they didn't have any retirement plan. They really didn't save much, but they were given the advice to buy a place to live in the country where they were working rather than renting. Well, they've been there for 35 years.
Hmm.
And now, fortunately, that city, that the lady is a refugee from that country and came back to minister. But after living there for 35 years, and the city building up around them, the lot next to them sold for over $2 million.
Wow.
So now they have something, even though they haven't saved faithfully, their mission hasn't helped them. They have been faithful with their time, and they were wise in buying that house.
Mhm.
And so now they have money to have choices
Mhm.
going forward. So having a house at home is not a bad idea, especially if you can rent it out and be paid for and have an asset. That's just one more asset class to have to
Absolutely.
give you some choices down the road.
Yeah, so I agree with that. Having a asset there at home is good. Couple things that you would want to think about is if you've been living in that home for 2 of the last 5 years and it's appreciated significantly, you're able to sell it. And if you're a married couple, $500,000 of the gain is tax free. So before converting it maybe to a rental, where then later on that any gain on that house will become taxable, you may want to sell it and buy the property next door. And then you have just locked in tax savings on that amount. And then you're starting anew with the new basis of the new house and keep renting that away. And just let somebody else pay that mortgage down all over those years, especially if you've got somebody who's local that can handle the management of the property for you. That's a great way. But the one thing that a lot of people aren't going to want to think about as they're going is, I got to sell this house and buy another one. But that can actually lock in quite a bit of tax savings if you're willing to do that.
Interesting.
And Doug, this is a really good example of finding an advisor who's going to give you the best possible advice he can give you from a biblical standpoint.
Yep.
Because if he doesn't know as much as he needs, and none of us do, he would have called Lauren or someone else and added discuss that issue to bring in that idea. Just to remember, don't forget about the gain that you can save there as you're looking at that choice.
Mhm.
So it just comes in. There's wisdom in many counselors.
Absolutely.
I've been having conversations like this for quite some time, and I've never heard that before. That potential buy the house next door strategy is kind of a in between for people who want to keep something to come back to. But interesting. Lock in the tax savings. So that's great advice. Well, we're moving towards the end here, so I'd just invite any other kind of parting thoughts or words of wisdom that you guys would have for the audience as we kind of wrap things up here.
Well, I think the chance that somebody is coming here and watching this is that they're already ahead of the game. They're looking for advice. They're looking for knowledge. And as Charles was just saying, wisdom in many counselors. So, reaching out and finding somebody like that is very important, and it's never too late. People who've been on the mission field for 10 years and then realized that they maybe should have done some things better. It's not too late to start looking for help and advice at that point. And no shame in it either. I think sometimes as soon as some word tax comes in, or they realize that they're not wrestling with fears and apprehension and all that stuff. But, there are people like Charles out here and you that are definitely there to help. And, we're there as a body to help each other. So, reach out at whatever stage you're in. The earlier, obviously, the better. But whatever stage you're at, reach out, get help, get advice, and you'll definitely be putting yourself in a position that can, secure your future while you're serving.
Thank you, Lauren.
Good closing remarks.
Excellent. Well, let me close us in a word of prayer, and then we'll send people off. So, Heavenly Father, I thank you for this time. I thank you for the wisdom that you've granted these two gentlemen and their willingness to spend an hour of their time sharing that with us. And I pray for those who are tuning in that you would bless them, provide for them, grant them wisdom as they seek to wisely steward their resources in order to allow them to pursue what you have for them and the ways that you have gifted them without having to concern themselves about making adjustments to pursuing their calling based on financial limitations and realities. So we thank you that you own the cattle on 1,000 hills, that you are faithful, that you are generous, and that you are good to us, Lord. Bless us as we go about our days. In Jesus' name, amen. Lauren and Charles, thank you so much. You are deeply appreciated. And I learned a lot just being here for this hour with you. And thank you very much for giving us your time and your expertise. Appreciate it.
Pleasure.